Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. Let's Talk Bonds gives fixed income investors all the options available to them for investments in fixed income, for right from government bonds to corporate bonds and ETFs. And also, it gives you a fair indication of where one should be able to invest in fixed income given the current interest rate and macroeconomic outlook. Now, last week we saw that government bond yields were largely flat, as in they were not really moving up, despite the fact that US Treasury yields jumped to 2.5%, the highest seen in many years. And so, with even with fears of inflation and government borrowing coming up for Indian bonds, the yields have not really moved up. But having said that, the yields are at higher levels. So GSEC, you have 5-year yields at around 6.35% levels, 10-year at 6.8%, and 15 and 30-year at 7.15% and 7.3% levels, while state development loans are closer to 7.25% levels. The ETFs, which is the Bharat Bond ETF, which is the index of PSU bonds. PSU bonds are government-owned bonds or AAA rated bonds. The 10-year ETF is trading at around just over 7%. But what we saw last week was very strong demand for PSU bonds. We saw Power Grid Corporation, which is again a AAA rated 5-year PSU, and one of the best PSUs in the country. This raised 5-year bond at 6.05%. Now, with GSEC yield at 6.35, this got 20 basis points or 0.2% less than the 5-year GSEC yield. Then we had Nuclear Power Corporation, again, very strong PSU, issuing 15-year bonds at 6.89%. And the 15-year government bond is at 7.15%. Now, these are all very the levels clearly shows that there is more interest in government-owned entities than the government bonds themselves. If the market is willing to take PSU bonds, which is rated AAA but owned by the government and largely derives its strength from the government, is giving better risk to PSU than the government securities itself, then there seems to be an anomaly in the markets. And one of the reasons could be that these PSUs are not coming to the market often enough to raise money. And the second is that with a huge borrowing program ahead, government bond yields could rise. But that really doesn't say anything, because if government bond yields rise, everything else should rise along with it. So it's very, the market seems to be a little, at this point of time, it's not moving in a direction which is normal with this kind of a behavior in terms of giving better yields to PSU bonds and government bonds. Now, we have other bonds like LIC Housing Finance, which is the housing finance company of LIC, which is issued 3-year bond at 6.25%. This is okay, largely in line. But LIC Housing Finance also issued a 10-year bond at 7.18%. Again, very fine spreads for the bond, which is, as we know, 6-year bond. It's even better than a state development loan, which issued a bond at 10-year state development loan, which is largely got much more liquidity than corporate bonds. They are trading at levels of 7.25%. So LIC Housing is getting better pricing than state development loans. And this shows that there's so much more interest in corporate bonds than government-owned entities or state loans. Now, coming down to corporate bonds itself, again, up to 3 years, the levels seem below 2-year AAA bonds are below 6%, and 3 years maybe around 6 to 6.5, 6.3 or 6.4%, depending on the issuer. And if you go down the rating scale, so last week we had Issuers like TMF, Tata Motor Finance Holdings, which issued a 3-year bond, zero coupon bond. It was level of around 7.69%. Then you had the Ramco Cements, which is a strong cement company from the south, that's raised 4 and 5 year bonds at around 6.9%, which is a good level for the company. And also, given that not many manufacturing companies come to the market to raise, this is a good issue for the market. You had Avance Financial, which is an education lender, issuing 3-year bond at very fine spreads. Given its rating, it's rated only A plus at 7.4%. Now we have A plus bonds, A-rated bonds of 1 and 2 years listed on Quick Invest by INR bonds, which are good NBFCs lenders promoted by strong groups at much higher levels, well over 9% levels. So this is a very strong, very good price for the lender given its rating. Shriram Transport, which is again it's a AA plus rated bond, and it's issued 3-year bond at 7.45%. Now, given that it's higher rated than Avance, it's actually got higher yield than Avance as well. And so it clearly shows that Avance has a very good level for this kind of a issuance. On the other issuers, Bank of Maharashtra issued perpetual bonds for their capital at 8.75%. And we had a microfinance company, Spandan Spurti, that's raised 6-year bond at 11.85%. This is rated A. Clearly, that's a microfinance company. It's paying higher yields, given that it's lending towards at very high rates as well. And others raising were Aditya Birla Finance, and GIC Housing, which issued 1 and 3-year floating rate bonds benchmarked to the 3-month T-bill. And today is our webinar on floating rate bonds, how to price them, and what are the issues in investing in floating rate funds or bonds, what are the positives and negatives. And those of you who attended do have the full, it's a masterclass on evaluation of floating rate bonds. We'll get a very fair idea of how to look at floating rate bonds or funds for investment. And the other issuances included IIFL Finance, which issued a 10-year bond at 8.6 to 9.35%. IIFL is the finance is the they have a wide lending profile, and typically they have been regularly coming to issue bonds in the market. So these are the levels in the market. Clearly, corporate bonds are finding a lot of flavor with investors, given that government bond, given that PSU bond deals we saw were better than actually government bond deals, were lower than government bond deals, and we should see how the whole thing pans out in April when the new government borrowing starts, and where the 10 GSEC yields are headed. And if GSEC yields are headed, normally corporate bond yields also will head higher. Yeah, so that's about it for today. Do not forget to download our app, Quick Invest by INR Bonds, where you get the best bonds available for investments in a current interest rate and macroeconomic scenario. You get all the information, and you have the best in-house in-app investment process, and you can buy the bond and it gets to your account on the same day. Thank you very much for listening.